All right, welcome to The Explainer. Today we've got a real head-scratcher for you, one that comes straight from the top of the auto world. It's all about Toyota. They just pulled off something pretty amazing, but at the exact same time took a massive hit to their finances.
And that really is the million-dollar question, isn't it? It's the paradox right at the heart of Toyota's latest quarterly report. I mean, they're selling cars like crazy, but their bottom line is telling a completely different and frankly kind of scary story. So, what's going on here? How is that even possible? Well, we're going to dive right into their own numbers to solve this exact mystery.
Okay, here are the numbers side by side, and the difference is just wild. On one hand, you've got vehicle sales up by a super healthy 7.1% from last year. That's over 2.4 million cars and trucks. That's a huge win. But then you look over at the net profit, and it's down almost 37%. You really don't have to be a finance whiz to see those two arrows are pointing in completely opposite directions.
So what could possibly cause a drop that dramatic? How can all those extra sales just get vaporized? Well, this wasn't a case of death by 1,000 cuts. Nope, the answer actually boils down to one single, massive factor. An external shockwave that just slammed into the company.
And this is the number at the center of the whole story. 1.4 trillion yen. That is a gigantic number. And that's the total profit hit Toyota expects for the entire year from just one thing. Now, let's see how much of that damage was done in this quarter alone.
So, out of that massive 1.4 trillion yen forecast for the year, a staggering 450 billion of it hit the books in just these last 3 months. You know, this wasn't some problem they could worry about down the road. This was happening right now, and it basically erased all the good news from the quarter.
Okay, so let's follow the money trail to see exactly how this played out. Toyota starts with last year's really strong profit. Their sales efforts, selling all those extra cars, that adds a nice 260 billion yen. Awesome! But then, bam! Rising expenses come along and take away 370 billion. And Toyota says that 450 billion yen tariff hit is the main reason for those expenses. It just completely wiped out the gains from selling more cars and then some.
But the story actually gets even more interesting because the big headline numbers don't really tell you where all that pain was felt. See, when your company is huge as Toyota, a storm like this doesn't hit every part of the business in the same way.
So no surprise here, the automotive business, actually building and selling the cars is the giant, making up more than 3/4 of the profit. But look at that smaller blue slice, financial services. That turns out to be really key, because while the car-making part of the company was taking this huge hit, the financing part was actually having a fantastic quarter.
And here's that tale of two businesses right next to each other. The core automotive profit, it fell over 18%. But at the same time, Toyota's financing arm, the part that handles car loans and leases for customers, saw its profits shoot up by over 39%. A lot of that was thanks to better lending margins in the US. It's this incredible buffer that really shows you how important having a diversified business can be.
And this chart, this is where you can see the damage, clear as day. Just look at North America. A year ago, it made a solid 85 billion yen profit. This year, it posted a 21 billion yen loss. That is a massive swing into the red. And when you see that other regions just had declines, it draws a direct, undeniable line from that US policy right to the damage on Toyota's books.
So this wasn't just a bad dream that was over after one quarter. This massive, unexpected headwind has forced Toyota to officially lower its expectations for the whole year. They're basically sending a signal to the market saying, hey, buckle up, this is going to be a tough ride.
The company had to slash its full-year profit forecast from 3.8 trillion yen all the way down to 3.2 trillion. That's a 600 billion yen cut in what they expect to make. It's a clear admission that this tariff situation is a huge negative force that they're going to be battling for the rest of the year.
And look, you don't have to take my word for it. Toyota is not being shy about the reason. Their own summary of the quarter says it all, right here. The results show lower profits, and the forecast has been revised downwards primarily due to the impact of U.S. tariffs. I mean, it doesn't get much clearer than that.
All right, so let's zoom out for a second. What does this one quarterly report really tell us about the bigger challenges for a global giant like Toyota? Well, it's a perfect case study in just how fast the world can change and the kinds of massive risks these huge international companies have to deal with every single day.
In their own official reports, Toyota lists all kinds of risks they're constantly watching. You've got everything you'd expect: currency swings, the price of steel, intense competition. But that second one on the list, changes in trade policies and tariffs? Well, that just went from being a what-if risk on a piece of paper to a 1.4 trillion yen reality. It just goes to show you how a political decision can completely overshadow even the best performance on the factory floor.
And that really brings us to our final question. For decades, Toyota has been the absolute gold standard for being efficient and building great cars. But what this quarter proves is that even for a manufacturing titan like them, external forces, politics, economics can be overwhelming. It really makes you wonder, not just for Toyota, but for any global company, how do you stay on top in a world that's just getting more and more unpredictable? Thanks for joining us on The Explainer.